Click the bell icon to get latest videos from Ekeeda.
Hello friends, myself Professor Uday Bukure. Now I am welcoming you on your own YouTube channel Ekeeda. Hope you are watching my videos regularly and you are finding it interesting. Friends, also refer our videos to your friends so that they can also get the knowledge. If you are watching my video for first time, please subscribe to our channel Ekeeda and also press bell icon for your latest notifications. Students, we are today learning for CA Inter course accountancy subject topic profit prior to incorporation, question number 3, which is on your screen. Let's read the question, students. Partners of Maitri agencies decided to convert the partnership into a private limited company. They are converting, means ongoing business is there. Partnership into a private limited company called MA Private Limited with effect from 1st January 2000 X2. So from that day it is converted, from that day it is taken over. The consideration was agreed at rupees 1 crore 17 lakhs based on firm balance sheet on 31st of December 2000 X1. That means purchase consideration is decided based on the balance sheet. It is merely an information. However, due to some procedural difficulties, company could be incorporated only on 1st of April 2000 X2. So can't I say period from 1st January to 1st April, that is up to 31st March exactly, will be a period of pre-incorporation, 3 months, Jan, Feb and March. And April onward it will be a period for post-incorporation. Meanwhile, business was continued on behalf of company and the consideration was settled on that day, means consideration was settled on 1st April 2000 X2 with interest at the rate of 12% per annum. The same books of accounts were continued by the company which closes its account for the first time on 31st March 2000 X3. First time accounts are closed on 31st March 2000 X3. One thing have you noticed? Business is taken over on 1st January 2000 X2 and accounts are closed on 31st March 2000 X3, means it is exactly a period of 15 months. 2002 will be a period of 12 months and further 3 months. So it will be a period of exact 15 months. So this data is given for 15 months, right? Sales were given, cost of goods sold is given. If I compare sales with cost of goods sold, I will be able to find out what is our gross profit. Salaries will be allocated on time basis unless otherwise some information is given. Depreciation will be taken on time basis. Sales will be allocated on advertisement will be allocated on the basis of sale. Discount will be allocated on sales basis. MD's remuneration will be taken to post. Miscellaneous office expenses will be allocated on time basis. Office cum showroom rent will be taken on time basis. Rent is a fixed cost. Interest, we have to see exactly what happened here, because here is one interest on purchase consideration 1 crore 17 lakhs. We will work out for that, we will see that later on. Company's only borrowing was a loan of rupees 50 lakhs at 12% per annum to pay the purchase consideration. Importantly, purchase consideration was paid on 1st of April X2, means can't I say this loan is taken on 1st April X2 and from that day onward there is an interest on loan, right? So we will work for that. And due to firm and for working capital requirements. So loan is taken not only to discharge the PC but it is also for their working capital requirements. Company was able to double average monthly sale of the firm from 1st April 2000 X2, but salaries tripled from that date. So here is a special information as regard to salaries. So salaries we will not allocate on time basis, we will work for that, we will do the working note. So it is not on time basis, it will have a working note for allocation of salary. It had to occupy additional space from 1st of July 2000 X2 for which rent was 30,000 per month. Certainly for working note will be there for rent calculation. So rent allocation I will do the working note, I will not allocate on time basis. So for rent we will have a working note. Interest, as they said, loan is also there, interest on PC is also there. For this also we will have a working note. Wherever a complication is there, we will prepare a working note. There is no rule. There is no rule. Wherever you find it is complicated, we will prepare a working note. No harm in that. Right? So our profit will be 19,17,000. Prepare a statement of apportioning cost and revenue between pre-incorporation and post-incorporation period and calculation of profit or loss for such period. So I will prepare a statement for apportioning profit between pre and post-incorporation. Students, I have done this format: statement showing apportionment of cost and revenue between pre and post-incorporation period and calculation of profit or loss, where I need to work out a GP. But before that, I need to work out two important ratios, that is ratio of time and ratio of sale, that is time ratio and sales ratio. We will do that basic working note first. I need to calculate time ratio, and for that I need three information: takeover date, incorporation date, and account closing date. In this they gave you that business is taken with effect from 1st January 2000 X2. Here they also mentioned company got incorporated only on 1st April 2000 X2, so it is my incorporation date I will mention. And first time accounts were closed. First time accounts were closed on 31st March X3. So my time ratio will be 3:12, or it could be 1:4. So I am writing 1:4. Number 2, I need to work out sales ratio. For this information is given, company was able to double average monthly sale. Average monthly sale is doubled with effect from 1st April X2. That means prior to that, if I say it is 1x, after that it will become 2x. Okay, so I am just noting it down. B rupees 1. Therefore, right, monthly sale up to 31st March X2, I am assuming rupees 1. So thereafter it is doubled. Therefore it will be rupees 2 per month. So what will be my pre-incorporation sales? Rupees 1 into 3 months. In pre-incorporation there were 3 months. It is rupees 3. Pre-incorporation, I mean to say January to March X2. Post-incorporation sale, it is from April 2000 X2 to March 2000 X3. So it is a period of 12 months. As per our calculations, it will be double. So I will say rupees 2 multiply by 12 months. It is equal to rupees 24. Right? So I can say that my sales ratio will be 3:24. If I reduce this ratio, it will be 1:8. 3 ones are 3, 3 8s are 24. So my sales ratio is 1:8. Okay, so these two basic ratios we have calculated, and thereafter as per the need we will prepare further working notes. My gross profit will be sales minus cost of goods sold. So I am just noting it down: sales minus cost of goods sold. Our sales figure is 2 crore 34 lakhs. Again, that cost of goods sold is 163,80,000. So I am just finding the difference to understand the gross profit. ₹70,80,000. It will be allocated on which basis, sir? Sales ratio. What is our sales ratio? 1:8. So it is divided by 9. This is 70 lakh 20,000. This 70 lakh 20,000 will be allocated on sales ratio, which is 1:8. So divide by 9, 7 lakh 80,000, 62 lakh 40,000. So it is allocated in sales ratio, and our sales ratio is 1:8, and accordingly we have allocated gross profit. B part, I need to write down my expenses here. In this example, we come across various adjustments. So I suggest you firstly complete all complicated part, and then we'll go with the simple part. So complicated part, where we can find, let's see. First thing what I can find here is that PC was 1 crore 17 lakhs, on which interest is payable at 12% per annum, and PC is paid on 1st of April. Three things: PC 1 crore 17 lakhs, rate of interest is 12% per annum, and PC was discharged on 1st April. From 1st January to 1st April, that is 3 months interest I need to work out, right? And then I will work out interest on loan. Here they gave you company's only borrowing was a loan of 50 lakhs at 12% per annum to pay purchase consideration due to the firm and for working capital requirements. So interest I need to split firstly. Let us see whether I am getting those answers or not. Here interest firstly I will note down for my PC. It is a period 1st January X2 to 1st April X2, that is this period, time ratio period, right? You can notice this is a pre-incorporation, so I can say it is a 3 months calculation. Our purchase consideration on 1 crore 17 lakhs. Rate of interest they mentioned 12% per annum, and it is to be calculated for 3 months. It is 3,51,000. B, interest on loan. They mentioned loan was taken to pay purchase consideration. That means loan was taken on 1st of April X2, and our accounts were closed on 31st March 2000 X3. So can't I say my period will be 12 months for this? How I will work out the interest? Loan was 50 lakhs. Rate of interest 12% per annum for 12 months. That will be 6 lakhs. In this way, my interest is allocated 351,000 and 6 lakhs. You can notice total interest is 951,000. So we got exact breakup. 351,000 is for pre-incorporation and remaining 6 lakhs is for post-incorporation. Why it is pre-incorporation? Because period belongs to pre-incorporation. This will be taken to post. Why post? Because period belongs to post-incorporation, this period. So I am noting it down. So interest as per working note, total interest 951,000. Working note number 3, for pre-incorporation it is basically interest on PC 351,000, and for next column it is 6 lakhs. So first complication as regard to interest we have done. Now I am moving ahead with the next page. Company was able to double the average monthly sales of the firm from 1st of April 2000 X2, but salaries were tripled from that date. So something about salary is given. So special ratio for allocation of salary we will do. We will assume monthly salary up to 1st April being 1 rupees, and thereafter it is tripled. So monthly salary up to 31st March 2000 X2 we are assuming rupees 1. Thereafter it is doubled, so it will be rupees 2 from 1st April 2000 X2 onward. it is tripled. Monthly salary tripled from that date. So it is 3 rupees. So how I will get salary ratio? See, pre-incorporation, it is a period from January X2 to 31st March X2. ₹1 multiplied by 3 months comes to 3 rupees. Post incorporation, that will be from April 2002 up to 31st March 2003, that is 2000x3. It will be ₹36. Therefore, salary ratio is equal to 3:36, or I can say it is equal to 1:12. Am I right? 3 ones are 3 and 3 twos are 2. So it is 1:12. What was your total salary? Your total salary was 11,70,000. Between pre and post, it is allocated in the ratio 1:12. So divide by 13, 90,000 and 10,80,000. So it is how I divided the salary. Working note number 4, it is 90,000 and 10,80,000. So salary is allocated based on our working note. So salary calculation is done. It had to occupy, means company had to occupy additional space from 1st July 2000 X2, for which rent was 30,000 per month. So we are very careful about this. So we have to decide allocation of rent. So one more working note will come. Total rent they gave you 7,20,000. They mentioned they have taken additional office, or I can say new office. It was taken from which date? New office is occupied from what day, students? From 1st July 2000 X2 up to 31st March X3. Goes without saying. Will it be a period of 9 months? What is monthly rent? 30,000. ₹2,70,000. This rent will be taken directly to post. Sir, why post? Because period belongs to post. Post incorporation is from 1st April 2000 X2 onward. So this period entirely belongs to post. Now if I minus new office rent from this total rent of 7,20,000, I will get balance rent for the old office. Balance rent is 4,50,000. It will be allocated on time ratio. What is our time ratio? Let's see the working note. Our time ratio is 1:4. So that amount of 450 will be divided in the ratio 1:4. So what will be a total rent for post incorporation and pre incorporation? Let us note down. So pre incorporation rent 90,000. Post incorporation rent 3,60,000 plus 2,70,000. It is equal to 6,30,000. So we are ready with these two figures. So I will write down in my main answer. Office comes showroom rent. We are dividing 7,20,000. As per working note number 5, 90,000 and 6,30,000. Okay, so it is how I have divided. We have completed paragraph for calculation of interest, monthly sale and all we have done, rent we have done, all complications are done. Now remaining things we need to allocate now in my main answer. Cost of goods sold we have already considered along with gross profit. Salaries we have taken. Depreciation 1,80,000. Time ratio. Time basis, your time ratio is 1:4. After depreciation we can notice advertisement is given 7,02,000. It will be allocated on sales ratio. Our sales ratio was 1:8. Our sales ratio, so 1:8. 6,24,000. So we have done with advertisement. Discount, assuming it is related to the sales, 11,70,000 will be divided in the same manner. Discount is divided 1,30,000 and 10,40,000. Managing director's remuneration will be taken in post 90,000. Miscellaneous office expenses will be purely allocated on time basis. Your time ratio is 1:4. 24,000 multiply by 4, 96,000. So we have done everything from this. Now I will work out how much is a profit or loss in pre-incorporation and post-incorporation. Prior to that, I need to take a total of the expenses. Students, I have taken total of the expenses of each column. Then I compared gross profit with the expenses. I got the profit or loss. So C part, profit or loss. Loss will be a negative figure, A minus B. In pre-incorporation period, I got a loss of 19,000, right? So there is no profit prior to incorporation, there is a loss prior to incorporation. But question I have not asked you how it is to be treated and all that, all things they have not asked. So for us, this is the last answer. I hope you have understood this simple question, very easy question. If still there are some doubt, I want you please see the video at least for 2 more times so that you can understand it well. Still if there are any doubts, please put in the comment box. We'll try to revert back your query as earliest. Thank you for watching this video. Keep watching, keep sharing with your friend. God bless you all.